Well, what is going on, guys, and welcome into the video. Well, you guys asked for it, so you're going to get it. So let's take a look at 3 high growth stocks that have been crashing down to earth lately that have huge potential on the back end. Now click up here for the video where I covered 3 crashing stocks that are profitable, beaten down big, and have huge growth potential too. But this video is about the high growth stocks, which those 3 stocks in that video cannot match in terms of growth. I will share with you what price I will buy them all at, what I see going on overall with the companies. But there is one point that I have not heard anyone else talking about in regards to these stocks, so you must understand it or you will lose money, as these are all high risk plays and you gotta get this right. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And let me know which growth stocks you are looking to buy down in the comments. I'd love to see what you are targeting. So what is the criteria I'm using to determine these 3 stocks, since it has to be different from what the other video had, considering these are all high growth type stocks? First, they must be at least 25% below fair value, which I know is the same as the last video. But this is where valuation comes into play and why I harp on it so much. You cannot know if a stock is undervalued if you do not do an actual valuation. Like we said before, a stock being down 80% from its all-time highs or 52-week highs or setting a new 52-week low is not relevant to valuation. It means absolutely zero. It means nothing. A stock can be 80% off from its all-time highs last year and still be massively overvalued. And yes, there are stocks in the market right now that are in that boat. And unfortunately, some of them are our favorites, the retail favorite type stocks. And valuation is infinitely harder for stocks like we're going to discuss today. So if you struggle to value a stock like Apple, then today's stocks will require extra work and patience to create the right valuation and price targets and plan to buy them. Second, they must have massive future growth ahead of them. Sorry, but I am not about to take on the risk of a high growth stock if there's not a lot of future growth coming ahead of them. I want a stock that can see revenue growth consistently of 30% or honestly a lot higher over the next 3 years. And third, they must have a clear path to profitability. They're not going to be profitable, but they need to have a clear path to profitability. So we are not discussing speculative stocks with little to no revenue at all. And we are not discussing stocks with a great PowerPoint, but no business model, no users, and not a single delivery being made. These are high growth companies that have actual revenue and revenue growth, have rapidly growing customer bases, have a large total addressable market, and have a path to become profitable over the coming years. I'm sorry, I'm not interested in a company with a PowerPoint that shows me their world-changing tech that nobody has bought yet, or revolutionary product that's not approved or actually developed yet, or anything else like that. Now is not the time to speculate on those types of companies, in my opinion. So on to stock number 1 that has crashed, and that is SoFi. Now to be clear, I think PayPal is the far safer bet and for months was actually the better value, maybe the best value in the stock market, and it's still a great value even today. But this video isn't about stocks like PayPal, it's about stocks like SoFi who have now entered that really undervalued territory. SoFi has honestly successfully shifted the business to where the hectic nature of all the student loan forgiveness mess that's going on there is now being offset in other ways due to a large degree. And honestly, the concern that I was worried about back then with those student loans is just not one that I really have anymore. It's not like it was earlier. And after their latest earnings call, what went from the cash cow for the company is now going to be an added cherry on top. And if it really booms, that will really push the stock to a lot higher highs. But that is a big if. This whole student loan drama could play out for a long time into the future. So you have to understand that and be patient. We have a lot of hurdles to go, but so far management has navigated them very well. And Wall Street has given us an incredible potential opportunity to add to this stock very cheaply, in my opinion. And everything we talk about today is just a condensed version of a much more detailed set of lessons that you can find inside the Market Insiders private group, where we have over 100 different tutorials and lessons. And it's also where we have courses on mastering your money, building up passive income and retiring early, and being financially independent. And we even have a real estate course that lays out how to live for free. You also get direct access to me through DMs. We got live streams all the time, and you see every move I make in real time, and you get my watch list with price targets too. It's all part of the ultimate online wealth building community that is over 1,000 members strong of people who are building their wealth, their portfolios, and changing their financial futures. So make sure you lock in your membership now so you get the discounted price for life as long as you stay a member. And remember, you're not only investing in yourself and your family, but you are helping out others in need, as half of everything goes to charity. So the second high growth stock that I've been buying, and it's honestly a group favorite, and that is DM or Desktop Metals. Now to be clear and upfront, This stock warrants a deeper dive and could easily fill an entire video on its own going through everything and what all is going on with this stock and the due diligence of this stock. This is the least sure bet of the group today, and we joke it's the ultimate stock since it moves wildly up and down. It's a trader's favorite for sure, but large funds like BlackRock seem to buy big chunks every time it has a major dip in price. It is actually currently up around 100% from the June bottom, but it was up over 200% just a few weeks ago, which illustrates how it moves and how volatile this stock is. They are expected to grow significantly each year, and they have been continuing to gain market share consistently in a field that is ever expanding, and there is no clear winner as of now in that space. And although my position is full, if it falls under $2 again, I will have to add more as I really like the opportunity, but you must do more due diligence and understand the risk before considering opening a position. So on to the third stock, and that is Palantir. I know this stock has been controversial here on YouTube, and some folks don't like the pounding on the table or the sales team not performing, and the performance has not been great if we're all being honest here. There are some things I am absolutely watching, but there also isn't a company quite like this one, and I think a lot of the drama over the last earnings call was honestly overblown. Now, I'm not saying I'm right and others are wrong or anything else like that. I'm not bashing anyone for their opinions or not wanting to own the stock anymore or anything else like that. But I have seen many, and I mean many bad earnings calls, many uncomfortable earnings calls, and just CEOs acting far more egregious than Alex Karp did on that earnings call. Sorry guys, been doing this for a long time and I've seen a lot worse. But then Alex went on CNBC like last week or something and was completely charming. I think Tom Nash and Jeremy covered that as well on their channel, and someone sent me the video too in my group, and it was honestly a great interview. I have to wonder if he came across like that in the earnings call last time, would all those folks view the earnings a little bit differently? Who knows at this stage, but I can't imagine that wouldn't have influenced people a little bit differently. What I personally saw big picture wise was the company at the beginning of the next step and stumbling out of the gate a little bit at first, but nothing fundamentally changed for me, so I decided to buy shares under $10 instead because I see this company potentially becoming a beast in the future given the world that we live in now. However, I have said from the start, like a year and a half ago, that Palantir is going to be a sneaky growth stock. We all just need to kind of look up one day a few years from now, and you're quietly sitting on a nice 3x or more with this stock. And I said a few years from now, guys, not next year. But that perfectly illustrates the point and danger to buying all these stocks given the market we had before this downturn and the expectation coming out of this market. If you expect a repeat of 2020 when we get out of this mess, or you think stocks 5xing or 10xing in a year is normal, you are going to be sadly mistaken and disappointed. Sure, these stocks are so beaten down that it may actually go on a great run coming out of this. But if you expect it to just, 5x next year and then, 5x the year after that and 5x the year after that, that is not how the stock market works and you're going to be disappointed. The point I'm trying to make is, do not get frustrated with these stocks if they're continuing to execute, but the stock price isn't just running up and running up and running up and running up. Tesla traded flat for 6 years before finally going on its epic run. And it happens with Apple all the time too, for example, which can trade flat for a year and a half or more. Amazon routinely trades flat for 2, 3, 4 years at a time. It's not unusual for that to happen. What is unusual is what happened in 2020 and then what we're experiencing now in 2022. So just take basically, 2020 all the way through 2022 and just kind of get it out of your head. These were anomaly, freakish, once in a decade or once in a lifetime type deals. They probably won't happen again, so don't worry about them. This is why having a plan, not letting emotions or noise or even YouTubers' opinions creep in and dictate what you do next, including whenever these stocks run, not letting them creep in and tell you it's going to 10x this year and 10x this year or 100x or whatever the heck all the noise will be whenever we come out of this and all the pumpers come back out. I buy looking 3 to 5 years out. That's it. I don't care what happens in 2 weeks or 2 months in terms of the price at all, and I'm not looking to 10x my money in 2 months either. Have a plan for if it goes lower or if it runs up, but you will never time the bottom perfectly, nor will you ever pick the perfect 10x stock that 10x's every year forever and ever and ever. So don't worry about it and just execute your plan instead. And don't get frustrated if these stocks take a long time to run. And if you're afraid to buy the dip because you don't know how to do a valuation or how to create a plan or how to keep your emotions in check, and you want 5 free courses and direct access to me to help and a ton of other resources, make sure you don't miss the Mega Deca Super Sale that's going on right now for the Market Insiders private group that is expiring next weekend. And click this video here for the stocks I'm still buying in this market, and click here for exactly what I'm doing to make huge money in this market. So thanks for watching, and we'll see you in the next one.